This is an audio recording of the LendIt Fintech Weekly News Show. The show is streamed live on LendIt TV, LinkedIn, YouTube, and Twitter at 5 p.m. Eastern Time every Thursday. In this fast-paced show, the LendIt News team and a special guest discuss the most important fintech news stories of the past week. Good afternoon, everybody, and welcome back to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, and joined, as always, by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm good, Peter. How are you?
Doing great. And our special guest for the first time, Kim Gerhardt from the Fintech Interactive. Why don't you do a quick intro of yourself, Kim?
Sure. Well, Peter and Todd, thank you so much for bringing me on. My name's Kim Gerhardt. I'm part of the Fintech Interactive, which is something that I launched about a year ago. But I have a lot of experience within strategy consulting as well as financial services. Over this past year, I've been doing a lot of work, working with operators in the industry with regards to collections, fair lending, credit scoring, machine learning, and AI. So I'm doing a lot of strategy consulting work with growth strategies and then also advising fast-growing fintechs. So keeping busy. I feel very fortunate.
It sounds like it. Yes, indeed. So, okay, let's launch right into it. We first news item I want to talk about is an announcement from Brex. We all know Brex for their corporate card that was originally for startups. Now it's for large companies as well. They've done extremely well. They're worth north of $10 billion and haven't been around very long. But their revenue has been interchange. That's basically been their revenue model. But that is about to change. We saw there was an article in TechCrunch talking about Brex Empower, which is a software as a service product. It's still about expense management and that sort of thing, but it marks a shift for one of the fintech leaders. Thoughts?
Clearly, they've moved away from just the startup angle, which is where they started, and I mean it's a natural evolution to move beyond the corporate card into what they call, I think, in the release, the fintech operating system, and moving on to more enterprise clients. And so it seems to be a natural evolution of where they are and where they were to kind of where they're going, which is more of a full service offering to not only startups, but to large enterprise clients. So it's a kind of a natural evolution for them.
Yeah, I totally agree. I mean, I think that they're growing in different ways. They're growing with their customer base, as the startups are scaling, they are going upstream, and DoorDash is just a huge example of going really, really upstream. But also too, what we've been seeing, or what I've been seeing in the small business space, is that it does make sense to kind of expand into other areas. And the cash flow and cash flow management is so critical to a startup. You want to see where you are, what your burn rate is. Expense management is stuff that's happening in the market. There's a number of players that are already doing that. And it's a very fragmented market, and I think it's very, very competitive. But I think it clearly shows that Brex is really focused on its customer and the needs of its customer, because that fuller picture is so important.
Yeah, for sure. And to get a company like DoorDash, which is a sizable, some sizable company that is, I'm sure they got a great deal being sort of the marquee first client, but gives them an idea of the types of companies they're going after.
And then also
shows you interchange is you're capped at what you can do with interchange as your main source of revenue.
Right.
And clearly we've seen others that are in the consumer facing business, the Chimes of the world, begin to diversify away from interchange being the only thing that focus in terms of revenue for them. And so it's also a natural move there to diversify revenue sources.
Yep.
And also too, subscription revenue is valued huge within the market. Just having that recurring subscriptions, the market values that. very strongly.
Yeah, for sure. That'll help when they go public eventually.
When they go public.
Okay, let's move on. I want to talk about Circle, the maker of USDC stablecoins. They had a big round, or they've announced. It doesn't look, it hasn't closed yet, but they've announced it, so it's probably a done deal. $400 million from BlackRock, Fidelity, Marshall Wace, and Fin Capital. It's interesting because Circle have announced a SPAC a few months back now, and apparently
one of the few still going in that space.
Exactly. It's it's still on track, supposedly. Valuation of $9 billion. We haven't heard. I mean, we don't know if this valuation was exactly that or what, but Circle have become really one of the leaders in the crypto space, and the money keeps flowing in.
Yeah, certainly to crypto, and the more, and I know we'll talk about BlackRock more in a couple of minutes, but the names like BlackRock, Fidelity, and others that are involved in the round continue to give crypto the stamp of approval that institutional capital and institutional brands, and also helps in probably the next year or 1 to 3 years with regulatory issues.
Yep.
If Fidelity's involved, if BlackRock's involved, if JP Morgan Chase is involved, and others, it is infinitely easier to craft legislation and regulation than it would be if they were still on their own and still dealing with either crypto hedge funds or crypto funds in general as the only sources of capital. This is large institutional players that are now saying crypto is something we all need to pay attention to, and that our clients want us to beginning to pay attention to.
And it feels like, the market is looking at this particular stable coin as one to trust, which is amazing. And this round of funding, it's definitely going to be fueling, future growth. It's going to be interesting to see how this turns out.
Yep, for sure. So let's talk about BlackRock then, because there was a Wall Street Journal article, I think it was just yesterday, that Larry Fink talked about BlackRock is talked about the Circle deal. Apparently, BlackRock has been managing the treasury or some of the treasury reserves of Circle, and based on their fundraising, they've got significant amount of reserves to manage. They expect to be managing more of it as time goes on, and they're really direct quote from Larry Fink, the CEO of BlackRock: "We are increasingly seeing interest from our clients in crypto." So that's BlackRock, the world's largest asset manager. I think the last time is just a hair under $10 trillion is what they're actually managing. So, USDC, second largest stablecoin, really. A lot of people think they're more stable, shall we say, than Tether, which is the leading stablecoin. But BlackRock, you can't get a bigger stamp of approval than BlackRock, right? If you've got an investment product.
Yeah, it's not like BlackRock is filled with the riskiest investors in the world. No. These are safe, secure investors, and if they're the ones itching to get an access and in towards crypto, it continues this push towards mainstream adoption. Because if you don't have the BlackRocks of the world, then you're still playing a bit more on the edges, though it's still getting to the mainstream adoption. But BlackRock, Fidelity, and others, I mean, it's all about mainstream adoption, and getting them involved gives the stamp of approval that they've been itching for these last few years.
Yeah, safety, trust, having others. And I think I was going to say, dip their toe in the water. This is so much more than dipping your toe in the water, right? This is a huge investment, and it's a huge announcement to the industry.
Yeah, and just think, with $10 trillion, I'm rounding up to 10 trillion. You put 1% of that into crypto, that's $100 billion. That's a significant chunk of the total market cap of crypto, and that. Who knows? It's a bullish sign, as we don't know what kind of. I'm sure a lot of the funds will not be touching crypto, but they certainly sounds like they're They'll be doing more there, which will be, that's just a bullish sign, no doubt about it. Anyway, we are sticking with the sort of digital assets theme today. I noticed there's a lot of digital asset stuff happening.
What a surprise.
Yes, indeed. Okay, so this was in the Defiant. I saw it in other places as well. Project Lithium, the DTCC, which is a clearinghouse for basically all stock trades go through the DTCC. I asked Bo earlier to have a guess how much volume goes through the DTCC on a yearly basis. He guessed 150 trillion, and that would have been a pretty reasonable guess. I would have probably guessed something similar, but $2.37 quadrillion went through the DTCC in 2021. That is 2,370 trillion.
Massive.
So anyway, Project Lithium is a CBDC prototype because, as we all know, when there's this T+2 settlement, which means it takes 2 days to settle just about any trade, which is going back to when it was done by paper in the 70s, and we don't need a 2-day settlement, but they've got to sort of run these pilots. And I was thinking, with that much money flowing around, if you can go down from 2 days to one in real time settlement, that's got to be a huge boost to economic growth with $2.37 quadrillion flowing around this system. So, they're hiring the Digital Dollar Project, who have really actually was the former head of the CFTC is actually running that. So
at the Giancarlo.
Yeah, Giancarlo. Yeah, exactly. So they are building a prototype to see if they can move, and it's interesting they're calling it a CBDC prototype, to see if they can actually move this stuff into real time.
Yeah, I mean, it's all about figuring out ways to move money as fast as possible, which also, in some ways is if done correctly, cuts down on fraud and other issues. Though we see with real-time payments today, there's the real-time payment mechanism, and then there's the kind of settlement on the back end. But, again, talking about kind of where we were with the BlackRock conversation, all this stuff that's happening just means huge advancement for the industry overall. Just think where we were pre-COVID to where we are today. And I think I've said this recently on one of our news shows. It's no longer an if. It's just a matter of when most of this is adopted in some ways. Now, it'll take longer to unwind some crappy and old technology. That's fine. Either way, there's this inevitability now that something along these lines is going to be adopted. The big question for me, and I think the CFPB was talking about this recently, is really interoperability. Can you get it on the same chain? Does it all have to be different? How do they work together? How does settlement happen when it's all these different chains, private and public? And there's a lot still to be worked out, but there's no shortage of innovation happening. And the faster that money moves, the more it's quickly settled in real time, the better it is, the more cost efficient it is, and ultimately safer the system eventually is.
Yeah, I totally agree. And I think that it's also a bit more than just the money movement. It's also the transaction processing all along. So there's a lot of players in the way, and the DTC through the years, they're kind of the custodians, and they're making sure that all the trades match and all of that. There's been so much innovation. I want to just kind of tell a quick story.
Sure.
Early in my career, I used to work at Merrill Lynch and also Union Bank of Switzerland. And it must have been I want to say 96, 97. One of those firms bought a small broker dealer in Johannesburg, South Africa. So I was sent there along with a team to kind of check things out and help with the integration and see how they do things. Do you want to know how securities were traded, cleared, and settled?
On paper?
I kid you not.
Oh my
As
God.
we saw a trade, the guy got up, went over to a cabinet, pulled out a paper certificate, put it in a backpack, put the backpack on, and went to his 10-speed bike downstairs. And he rode his bike, 5 or 10 minutes away to then clear that trade. So that, that's a bit of an anomaly, but I just thought I'd share that story because not that many people have insight into that. That was in the late 90s. Granted, it was Johannesburg, South Africa, and it might have been a strange security that they were trading. But that just gives a sense as to just how far we've come.
Yeah, well, I remember, I remember back when I was a young kid on TV, they showed the stock trading in Australia, and the Australian Stock Exchange in Sydney was done with chalk and a chalk, and they would write up the trade, then they would make note of it on a piece of paper, and then do it anyway.
Yeah.
We digress.
Think back only to the Robinhood issue of what was that a little over a year ago, and the main issue there was putting up the collateral and the money until things settled.
Yep.
And if you don't need to do that, it doesn't put some of these companies, especially like fintechs and more innovative players, in this bind to come up with $4 billion in capital at the drop of a hat.
Yeah, they wouldn't have had to do that
Exactly.
if they had real-time settlement. Okay, let's move on. Staying with crypto, we are talking about MoonPay, and they've been in the news a bit lately, and they're in the news this week because they have just A-list celebrities, many. They have 60 A-list celebrities who are putting in equity investments into their company, totaling $87 million. Real money. Justin Bieber, Gwyneth Paltrow, Ashton Kutcher, just to name a few. There's you can go and if you look at the CNBC article, it does list several others more. Of course, there's Snoop Dogg and Paris Hilton, Matthew McConaughey. Boy, this goes on. They are really this is actually an add-on to their funding round they did just a few months ago. And
$555 million.
Yeah, 555. This is another $87 million add-on, but they're getting these celebrities to put in real money. I mean, I know for a lot of these celebrities, $1 million isn't very much, but it's still real money where they they don't obviously have to. What was fascinating to me about this article is the CEO was saying that, yeah, we went out and asked all these people. Hardly anyone said no. Pretty much everyone said yes. So they all it's like celebrities and crypto. It's just become this kind of marriage that I certainly didn't see coming.
I looked into this a little bit, and what I noticed, or at least what I read, was that they very quietly introduced something called the MoonPay concierge service at the end of 2021, which essentially was a referral service. Not everyone could sign in, but it was a white glove service to help high net worth individuals kind of purchase all of these digital assets, because it can be quite complex at the beginning. So it was very high touch, very white glove, and a lot of these celebrities. And in fact, Jimmy Fallon was one of the beta users. And I think all of these players have kind of experimented with that. I looked at what Gwyneth Paltrow does on her Twitter, and she even thanked MoonPay concierge because she's doing the Bored Ape NFT.
Right.
So I think MoonPay has really helped pave the way in a very, very smart way with the industry to really show a lot of creativity and fun, and it's current.
Mm-hmm.
It's amazing how quickly crypto has leapfrogged fintech and other things in the market because of stuff like this. You don't see Gwyneth Paltrow, you don't see Justin Bieber talking about Lending Club or Prosper, or there's some that talk about like Step and a few of the other catchy names. Chime is very much in the news and on advertising, but it's just like you said, Peter, this marriage of crypto and celebrity and crypto and sports and it is really just taking it from like here and just totally leapfrogged fintech, when really the adoption and use of fintech is significantly wider to the everyday person. They don't call it fintech.
Right. It's not as sexy. Crypto seems to be sexy right now.
Now it is. And it's fascinating to see. I don't know how long this honeymoon will last. It's probably got some time to go, but it's a really fascinating journey how quick the adoption really is.
Right. Well, some of these companies aren't going to make it. I mean, MoonPay have done well, but there's a very competitive market, and it's obviously not just been one winner. But these companies don't have to make money right now, and so they still attract capital. And MoonPay's whole thing, and I didn't know about that white glove service. That was really interesting, Kim. But their whole thing is about making it easy. Like you can just pay by credit card, pay by debit card, connect your bank account, whatever way you want to do it. It's a really easy onboard to crypto. And I think everyone's these not like most of these A-list celebrities don't know anything about fintech. I mean, some of them do, but you've got Ashton Kutcher, who's very heavily hands-on in fintech, but most of them don't. And so they need, if they want to learn, they need someone to hold their hand. And it sounds like MoonPay organize that. Anyway, let's move on to the next story. Is from Step, which you just mentioned, Todd. Step is basically a debit card, or it's officially a credit card, but it acts like a debit card for teenagers. I have 2 teenagers in my house, and we are Step users. They have introduced an investing product. They actually haven't launched yet. We signed up just today for the waiting list. My daughter, who's 13, is very keen to start investing in crypto and the stock market. So that will be rolled out here shortly. Interesting, they're using Zero Hash is their partner for the crypto offerings, and they are it's the teenagers of today. They talk about NFTs in school. They talk about crypto, and they understand this world probably better than your average, certainly your average Gen Xer, that's for sure, which is what I am. But I think it's anything that can help teenagers learn about investing. I think.
I also think one of the smarter things that crypto has done, and it's part of the movement, is it's moved beyond just finance. It's in NFTs, which is with art. It's in gaming, which a lot of kids and teenagers are in. The gaming world, and so it's moved beyond just this stuck up finance world, which many people still view as they don't like to talk about money. They don't think it's cool. It's made money. It's made investing. It's made Bored Apes. Whatever the product and avenue, it's made it really, really cool. And I think that's something that banking and fintech is the cooler version, but it's still not nearly as cool as crypto. And I think Step is obviously jumping into that. Zero Hash, shameless plug, is a big sponsor at our upcoming USA event. And they're just making it very, very simple on top of it. It's still not an easy process to mint your own NFT, to get involved in the market. But some of these companies are kind of that intermediary to make it simple, even though it's not fully there yet.
And I would just also add, even beyond the crypto piece, which I think is killer, I think that these fintechs that are serving this particular market, I'm, as a parent, jumping up and down at all of this. So my kids, I have 4 of them, and they range between ages 12 through 16. And I'm a big user of, we don't use Step, we use Greenlight. But it's just, I think, so unbelievable teaching children positive and prudent cash management practices, because this is what's needed for them in their lifetimes. And big banks simply can't do it. They simply can't do it. A decade ago, I was going into a big name bank with my 4 kids and all of their coin jars with all of their cash and coin, and the people and the teller behind me, they wanted to kill me. They were looking at me with daggers with all of these kids and deposit slips and coin, and the teller behind just wanted to go on break. It was a disaster.
Right.
Absolute disaster.
And the kids resonate with this now. I mean, my daughter loves using her Step card, and again, you're teaching them money management habits. I mean, she's now got a part-time job that she gets her money directly paid onto a Step account, and it's a great thing to have. Like, everything, their money life is managed on an app, and that's how they want it. And it's It's a really intuitive experience.
So my kid that just walked in behind me, he's going to be 16 in about 2 weeks, and that's a whole nother issue for me. But he's in Greenlight. He has been actively investing. They do not do crypto at all. In fact, on their website, they say that it's too risky. But he's into Apple and Amazon and Berkshire Hathaway and Tesla and all of that. It's wild to talk about, to talk with him about investing.
They can own a chunk of these companies.
Yes.
A small chunk, but
small chunk, very small chunk.
They're owning the small chunks of the companies that they're using, Apple, Amazon. Yeah. I mean, it makes them feel as if, all right, I have a piece of what I'm using, and it marries the relationship even better than just the device or just the Amazon Prime account that drops something at my door in 36 hours.
Yeah, I'm wildly bullish. I'm wildly bullish on all of these, and I'm just very grateful that fintechs are coming in to help the younger generation.
They have such an advantage over our generation that grew up without these tools. So. Well, we have the potential to have, financial literacy vastly improved. But anyway, let's move on. I want to talk about FIS and Fireblocks. We just mentioned. Actually, no, we didn't mention. We mentioned Zero Hash, didn't we? But Fireblocks is another sponsor of ours. And FIS, obviously, core banking, 6,400 clients. Traditional banks and credit unions, obviously. Fireblocks is basically enables crypto trading and enabling DeFi, bringing DeFi to the institutional DeFi, which in some ways is an oxymoron, but it is. But there is the possibility that if this really takes off, the institutions are going to want to be involved, and Fireblocks and FIS are going to make that happen.
It's a genius move to go to the technology provider that the banks are already comfortable with. Mm-hmm. And if you partner with them, then the banks are assuming, all right, if you're partnering with our core provider, then you're safe enough for them, you're safe enough for us and all the banks that are in this network. So it's a genius move to get in with, thousands of banks, pretty easily. And it's just another partnership that's bringing crypto to traditional FI, and will only make the regulators have to put the correct guardrails around it sooner rather than later. Mm-hmm. Essentially, it's the market's already moved, and the regulators are going to have to come in behind and say, all right, here's how far you can go, and here's the true guardrails, especially if thousands of banks are now adopting it this quickly.
Mm-hmm.
I feel there's a part of, I have a lot of questions with all of this. And I think that it's just my experience working with FIs in the field of know your customer and AML. So, the whole notion of having a whitelisted set of participants, I think is super intriguing, but getting that step to be whitelisted and approved and vetted, I just have a lot of questions there. I'd love to learn more about it.
Yeah, the devil's going to be in the details. That's right, Kim, because but these banks are not going to touch anything without full KYC AML.
That is correct.
Yeah, and Fireblocks obviously realize that, and they're bringing that sort of. They're going to.
And you can see there's like the two avenues are in crypto right now. There's the KYC, the Fireblocks, the Gemini, the Zero Hash way, and then there's like the Uniswap. The Binance, the other way, which is, anonymity and all about DeFi and just your wallet address and no KYC and fully KYC'd, just a more efficient way to bank. And it's kind of like DeFi / KYC and then DeFi at its core.
Right. Yeah. Anyway, let's move on. We want to get to this one last story. We had one. This has nothing to do with crypto or digital assets whatsoever. We have the CFPB.
You found one of those stories?
we started and ended with stories that nothing to do with crypto. So, TransUnion is being sued by the CFPB for deceptive marketing practices. They had a settlement in 2017 around marketing practices, and the CFPB are claiming that they are an out of control repeat offender. That's an exact quote from the head of the CFPB. TransUnion, of course, say the lawsuit is meritless, and the company has a consumer-first approach. But I'd love to get your thoughts, Kim, of how what do you think? There's anything here?
Well, first of all, I've been involved in several class action lawsuits as an expert witness, and even before that, looking and going through depositions and orders and all of this. And whenever you see a lot of stuff in black and white, they always make the other side look like incredible, evil people that all that they're been put on this earth was to defraud and lie and steal.
Mm-hmm.
And when I read some of the things in this press release, talking about out of control and unwilling or incapable of operating its businesses lawfully, I kind of look at it, it's like so unfair. It's just so unfair. It's scathing. Mm-hmm. And you want to hear from the other side. So this kind of words I've seen before. I just think it's unfortunate that it's so out in the public eye. And I don't know what TransUnion's response is going to be.
Mm-hmm. Mm-hmm. Okay, Todd, any last thoughts?
Yeah, I mean, there's probably something there, but it's probably not nearly the story that the CFPB is. I mean, it's politics. The CFPB is a government agency, and they need to get leverage. One way to get leverage is to drop the hammer like this. If TransUnion is willing to fight it out, they probably end up with like a no fault, some sort of penalty, and it's infinitely smaller than where it is today, but they're playing the game.
Yeah.
The one thing that I think does make sense is his communication kind of saying that he's also establishing a dedicated unit to kind of look at previous issues just to make sure that the companies are addressing them. I think that's good.
Yeah.
But I don't know. We'll see.
We'll see. Anyway, that's all we have time for. Thank you very much, Todd and Kim. Thank you to the audience for listening.
Thanks, Kim.
Thank you so much.
Before I sign off, a reminder: LendIt Fintech USA. Kim's going to be there. Todd's going to be there. I will be there.
I'm so excited.
And you need to be there too.
Yes, you need to be there too. It's in New York City, May 25th and 26th. Go to lendit.com. Go buy a ticket.
Yep. And then reach out. I'm going to be there. Would love to see you guys there.
Great.
Thanks,
everybody.
Thank you, Peter. Thank you,
We'll be back same time next week.
You.
See ya.
Bye.